Well, Toronto-based digital mortgage company Pine was just named LinkedIn's #1 startup for 2025. And the company's CEO is joining us today to talk more about this and running a successful home-focused business. We're joined by Justin Herlick, co-founder and CEO of Pine. Justin, thank you very much for joining us today.
Thanks for having me.
Let's talk a little bit about what this is, a digital mortgage. What's the difference between that and going to the bank?
So digital mortgage means that we can help you online. So no need for a branch visit, no need to meet people in person. We do have lots of staff that help people across Canada. But a digital mortgage really just means meeting customers where they want to be met, which is on their time. So you can apply at 1 a.m. You can take an appointment during the day if that works for you. Really, we're on your schedule. And that's the main difference.
And how is it working when it comes to things like security and protecting the people who are getting involved with this and also ensuring there's no fraud involved?
Yeah, so we're digital first. So all the technology and systems we've built in-house. So I'd like to think that we're the most secure because rather than taking an old process and trying to secure it after the fact, we're secure from day one, which has been a big focus for us. Now, being online, we have to take extra measures against fraud. We're not meeting our clients in person, but there are lots of ways to verify identity, verify income, because it is a scary world out there, and we're doing all that we can to make sure that we're approving and funding the highest quality customers.
Right.
Justin, first of all, congratulations on the LinkedIn Award. It's great news. Love seeing entrepreneurs succeed here in Canada. Wanted to ask you a question about your target demographic. Are you targeting the prime borrower, or is it more near prime, subprime, people with non-traditional credit histories primarily?
Yeah, so to date, we've been mostly focused, almost entirely focused on the prime borrower. So what I like to tell my friends and family is anyone who's getting approved from Pine is more than likely getting approved from a bank. We're not looking at clients through a different lens. We're actually underwriting to probably a stricter standard, just due to a few restrictions that we have. But with that, it gives us a really healthy prime group of customers, and we'll look to non-prime, or what's more traditionally called alternative mortgages, next year.
Gotcha. And given that, as I understand it, you're not a depository institution, what's the funding source for the mortgages? Do you securitize them, or do you have wholesale funding arrangements to fund them?
That's right. We're not a depository institution, so we don't issue GICs. We don't take deposits like a bank or a trust company. We work with those institutions who provide us wholesale funding, and then we do work through the securitization market. So they'll fund a loan with us, being the originator, and then eventually it will generally end up in a mortgage-backed security.
And who are you finding is coming out? Are you getting young people looking at this, or is it a mix?
We're really getting a mix. So initially out of the gate, a lot of people thought, okay, this is going to appeal to a younger audience. But the reality is younger people still have a hard time getting into home ownership in this country. So we are seeing a wide spectrum. I think our average age is about 41, 42. So probably younger overall than the average homeowner, but still, not someone straight out of school or not someone starting their career.
And those are the ones that are comfortable with going online and not thinking twice about this.
Yeah, and you know what? We've actually found that people who are coming up for a mortgage renewal, so they got a mortgage maybe traditionally through a bank or a mortgage broker, they're now coming up, they're a little bit more comfortable with the process. Those people really resonate with us. So it's not always first-time home buyers. That's another thing that people think about us. It's oftentimes people who feel comfortable and they just want to save money because they're coming up with a huge renewal. Interest rates have obviously gone up since the lows of COVID, and now they want to find a way to save money and they come to us.
And when it comes to doing credit checks and everything, is it any different than the banks? How are you doing those? We just touched briefly on about how you're doing those things.
Yeah, so we'll do a credit check on you when it's the right time in your process. So if you come to us just looking for advice, we won't do that because some people are sensitive about that. But our process is more streamlined and straightforward. So you'll give us credit consent through our online technology. We'll then pull your credit and we'll assess the quality and see if we can qualify you. So it's a similar process, but it's a bit more streamlined because you're doing it from the comfort of your home rather than having to print out a PDF and sign it, wet sign, and fax it back.
And excuse me, talking about a little bit more about the protection thing. How are you protecting people when they come to you and knock on your door?
Yeah,
or knock on your on your website.
Yeah. So when people come through our online application, we're securing it much like other modern fintech companies. So all of our data is encrypted in transit and at rest. We have tight security controls to access our systems. Not anyone can get on. And we have many layers of digital protection in the forms of virtual private networks and different security that we've taken. So a little background on myself. I actually worked for a company called Blend, which was providing mortgage technology to 1/3 of the entire U.S. mortgage industry. And we had customers like Wells Fargo, U.S. Bank, BMO Harris. So while I was at Blend, I really learned a lot about what it takes to secure online financial information.
And you said you're working with the banks for the funding?
the banks do work with us for funding, yes.
And what's the reaction been from them?
It's been very positive. The banks are big, powerful financial institutions that keep our country stable. And for them to work with a company like Pine, it's a very rigorous process. You can't just walk up to them and say, hey, I want a funding line. It takes many years of audit history, many years of running it. So we're a fully audited financial firm. And with that, they've been excited to tap into more of a digital market, because today the reality is with all of the big Canadian banks, you can't go to their websites and do the full mortgage application. You can do a little bit at the beginning, but then it stops and it falls back to the more traditional. So for the banks, they say this is a way for us to get exposure to the digital consumer through a company like Pine.
And where are your profits coming from then?
So we are a mortgage originator, which means we get certain fees throughout the process paid for by the banks, not by the consumers. We don't charge our consumers any fees. And those are for originating the mortgage and also for administering and servicing the mortgage. So that's the big thing from a business model perspective that separates us from a traditional mortgage broker, is that we're also incentivized, and it's part of our revenue streams to make sure that that client is kept in good standing. So we're an administrator of those mortgages as well.
Okay, Brian, we're almost out of time.
I was just going to ask about who owns the credit risk on the underwritten mortgages. Would that be the banks that are providing you with the wholesale funding, or do you have some sort of split share of the credit losses that might arise from these?
So it depends on the specific product that we're offering. Most of our loans are actually insured through one of the 3 Canadian insurance companies. So the risk has been shifted to an insurance company against default. There's obviously other risks involved in mortgage, just prepayment, interest rate, and operational risk. And those are split depending on which risk you look at with us in the bank.
Gotcha.
Okay. Justin, thank you very much for joining us today. We appreciate it.
Thank you for having me.
Justin Herlick is the co-founder and CEO of Pine.